Your XRP is about to be affected by a decision being made today. Not next week, not next month, today. In the next few hours, the most powerful financial institution in the United States, the Federal Reserve, is announcing its interest rate decision for March 2026. And I know what you were thinking. What does the Federal Reserve have to do with XRP? I bought crypto to get away from banks and governments and institutions making decisions about my money. I understand that. I felt the same way. But here's the truth that every XRP holder needs to understand right now. The Federal Reserve's decision today will directly determine whether XRP goes up, stays stuck, or drops back down over the next 30 to 60 days. And in this video, I am going to show you exactly why. I am going to show you the historical proof of what happened to XRP after every single Fed meeting in the last 12 months. I am going to give you the 3 specific scenarios for today's announcement and exactly what each one means for your XRP. And I am going to give you the exact price levels to watch today so you know immediately which scenario is playing out. This is not a complicated video. By the time you finish watching, you will understand something that most XRP holders do not. And that understanding is worth more than any price prediction. Let us start right now. First, let me explain the Federal Reserve in 30 seconds for anyone who needs a refresher, because you need to understand what this institution actually does before you can understand why it affects your XRP. The Federal Reserve is the central bank of the United States. Its most powerful tool is setting interest rates, specifically something called the federal funds rate. This is the rate at which banks lend money to each other overnight. When the Fed raises this rate, borrowing money becomes more expensive for everyone. When the Fed cuts this rate, borrowing money becomes cheaper for everyone. That sounds simple. But the impact on financial markets, including crypto markets, is enormous. Here's why. When interest rates are high, investors can earn safe, reliable returns by putting their money in government bonds and savings accounts. A United States government bond paying 5% interest is basically risk-free money. Why would you take the risk of buying XRP when you can earn 5% doing nothing? But when interest rates are low or falling, those safe returns disappear. A government bond paying 1% suddenly looks very unattractive, and investors start looking for higher returns elsewhere. In stocks, in real estate, in commodities, and in crypto. This is the fundamental connection between Fed decisions and XRP price. It is not complicated. It is just supply and demand for risk. High rates mean less demand for risky assets like XRP. Lower rates mean more demand for risky assets like XRP. Now let me show you the historical proof, because I do not want you to just take my word for this. I want to show you the actual pattern. Look at what happened to Bitcoin and XRP after Fed meetings in 2025. Bitcoin dropped after 7 out of 8 Federal Reserve meetings in 2025. 7 out of 8. Every time the Fed disappointed the market, every time it signaled that rates would stay higher for longer than expected, crypto sold off. Hard, fast, without warning. And XRP was not immune. After the January 2026 Federal Reserve meeting, XRP fell from $1.91 all the way down to $1.60 within days of the announcement. That is a 15% drop triggered directly by one Fed meeting. 15% in a few days, because of one announcement. Now here is the situation today. XRP is currently trading at around $1.50. It just had a strong breakout yesterday. It just flipped BNB to become the 4th largest crypto in the world. The community is feeling hopeful for the first time in months. And today, the Fed announces. The timing could not be more critical, because what the Fed says today will either confirm and accelerate the breakout that started yesterday, or it will kill it before it even gets started. So what are the 3 scenarios? Let me walk you through each one, clearly, simply, with the exact price levels you need to watch. Scenario number 1. The hawkish scenario. The Fed holds rates and signals no cuts coming in 2026. This is the bad scenario for XRP. Hawkish means the Fed is tough on inflation. It means rates stay high. It means safe assets continue paying attractive returns. And it means investors have less reason to move money into risky assets like XRP. If the Fed today signals that it sees 0 interest rate cuts for the rest of 2026, here is what will likely happen to XRP. The initial reaction will probably be a sharp sell-off. The excitement from yesterday's breakout will fade quickly. The price will likely test the $1.39 support level that was just broken. If that level does not hold, XRP could fall back to $1.20 or even $1.10 within the next 2 weeks. The good news about this scenario is that it does not change the long-term thesis for XRP. Goldman Sachs still holds their position. MasterCard is still partnered with Ripple. The DTCC integration is still real. These things do not disappear because of one Fed meeting. But the short-term price action would be painful. And if you are a short-term trader, this scenario requires caution. The price level to watch in this scenario, $1.39. If XRP closes a daily candle below $1.39 after the Fed announcement, Scenario 1 is playing out. Prepare for more consolidation. Scenario number 2, the neutral scenario. The Fed holds rates but signals 1 or 2 cuts later in 2026. This is the most likely scenario according to market expectations going into today's meeting. The Fed keeps rates the same today, but gives the market hope that cuts are coming later in the year. This is the middle path. In this scenario, XRP will probably consolidate. The initial reaction might be a small dip of 2 to 3% as some traders sell the news. But the overall trend should remain intact. The breakout from yesterday is not invalidated. XRP holds above $1.39, and the price drifts in the $1.40 to $1.60 range over the next 2 to 3 weeks while the market waits for the next catalyst. This is actually a healthy outcome for XRP. It means the bull case is intact. It means the institutional buying continues. It means the next push higher can happen when the first actual rate cut is announced. The price level to watch in this scenario, $1.45. If XRP bounces off $1.45 after an initial post-announcement dip and closes above it, Scenario 2 is playing out. Hold your position and be patient. Scenario number 3, the dovish scenario. The Fed signals more aggressive rate cuts than the market expected. This is the best scenario for XRP. Dovish means the Fed is more concerned about economic growth than inflation. It means they are willing to cut rates faster and more aggressively. And it means the cost of holding safe assets drops, making risky assets like XRP more attractive. If the Fed today surprises the market by signaling 2 or more rate cuts in 2026 before most analysts expected, here is what could happen to XRP. The price could push through the $1.65 resistance level that has been the next target above today's price. If that level breaks, the psychological $2 level becomes the next target. And a move from $1.50 to $2 would represent a 33% gain from today's price. This scenario, combined with the institutional buying that is already happening, combined with the XRP ETF inflows, combined with the MasterCard and DTCC developments, could create the kind of momentum that turns a bounce into a genuine bull run. The price level to watch in this scenario, $1.65. If XRP breaks above $1.65 with strong volume after the Fed announcement, Scenario 3 is playing out. This is the confirmation signal that the bulls have been waiting for. Now let me address something directly, because I know some of you are watching this and thinking, this all sounds very complicated. I just want to know if I should be worried about my XRP today. Here is the simple version. If the Fed is nice today, XRP goes up. If the Fed is neutral today, XRP stays roughly where it is. If the Fed is mean today, XRP dips, but the long-term story does not change. That is it. That is the simple version. But here is what I want you to take away from this video beyond just today's announcement. The most important skill you can develop as an XRP holder is not picking the right price to buy. It is not finding the best trading strategy. It is not following the right influencer on X. The most important skill is understanding why the price moves the way it does. When you understand that, you stop panicking during dips. You stop making emotional decisions. You stop selling at the bottom because you got scared. And you start making calm, rational decisions based on real information. The Federal Reserve connection is one of the most important things to understand about why crypto prices move. And now you understand it. That knowledge will serve you in every single future Fed meeting, not just today. Now let me talk about the bigger picture for XRP beyond just today's Fed decision. Because even in the context of this important announcement, it is important not to lose sight of what is actually happening with XRP on a fundamental level right now. In the last 30 days alone, Goldman Sachs officially disclosed a $154 million XRP ETF position. MasterCard officially partnered with Ripple and connected it to over 100 million merchants worldwide. Ripple Prime was added to the DTCC clearing directory, giving it a direct connection to the institution that processes $2 quadrillion every year. Total XRP ETF assets reached $1.44 billion, with 83 institutions officially holding XRP exposure. XRP flipped BNB to become the fourth largest cryptocurrency in the world, and the monthly RSI reached its most oversold level since the 2022 market bottom. All of that happened in 30 days. The Federal Reserve meeting today is important. It will affect XRP's price in the short term, but it does not change any of those fundamental developments. Goldman Sachs is not going to sell their position because of one Fed meeting. MasterCard is not going to cancel their Ripple partnership because interest rates stayed the same. The DTCC integration is not going to disappear because the Fed is cautious about cutting rates. The foundation underneath XRP right now is the strongest it has ever been in the asset's history. One Fed meeting can shake the price, but it cannot shake the foundation. And here is the final thought I want to leave you with. Every single major bull run in crypto history, including Bitcoin going from $10,000 to $69,000, including XRP going from a fraction of a cent to $3.84 in 2018. Every single one of those runs happened during a period when the Federal Reserve was either cutting rates or signaling that cuts were coming. We are entering exactly that kind of period right now. The Fed may not cut today, but the direction of travel is clear. Rates are coming down, maybe slowly, maybe more slowly than the market wants, but they are coming down. And when they come down, the institutional money that has been quietly building positions in XRP through regulated ETFs will be joined by a massive wave of new investors looking for returns that safe assets can no longer provide. That is the environment XRP is about to operate in. Not a guaranteed outcome, but a fundamentally favorable one. Today's Fed announcement is one chapter in a much longer story. Watch the price levels I gave you. Understand which scenario is playing out. And keep your eyes on the long-term picture, because the long-term picture for XRP has never looked like this before. That is everything you need to know about the Fed decision and XRP today. Simple, clear, no hype, just the facts and what they mean for your money. Now I want to hear from you. Which scenario do you think the Fed will deliver today? Type hawkish if you think the Fed will disappoint the market and XRP will drop. Type neutral if you think the Fed holds and signals modest cuts and XRP consolidates. Type dovish if you think the Fed surprises the market and XRP breaks to $1.65 today. Drop your answer in the comments right now. I'm going to come back to the comments after the Fed announcement and reply to everyone who got it right. Let us see who predicted this correctly together. If this video helped you understand something that most XRP holders do not understand, please subscribe. Because understanding the macroeconomic forces driving XRP price is going to be more important in 2026 than any chart pattern or influencer prediction. And I cover these topics every single week on this channel. My next video is going to cover something that is directly connected to today's story. The conflict in the Middle East is creating fear across global financial markets right now. And XRP holders specifically are being affected in ways that most people have not explained clearly yet. That video is coming very soon. Subscribe so you do not miss it. Thank you for watching. I will see you in the next one.